Good morning, everybody. Hey, welcome to Wednesday, April. Get the right month here, April 14th. And earnings season has begun with the banks coming out today. We'll talk about that and more when Dave joins us here in just a few minutes. But remember, there's only one thing that really and truly any of us can control within our portfolio, and that's how much risk you have. If you don't know what your exact risk number is and how much risk is equated in your portfolio, you definitely need to sit down with us and go through our financial x-ray. Give us a call at 863-382-0037 for your financial x-ray. Hey, Dave's coming up next. We've got lots of earnings to talk about this morning.
5.7 FM Club Nouveau there. It's morning, Dave. We're at 65 degrees here. It's 8:39, and we're going to check in and see what's going on with your money today. We're finally into earnings season, which means we got some individual issues to talk about, as well as a bunch of tidbits and news that could be affecting the markets today. Let's start it all out by heading downtown to Statler Financial Services, where Phillip Statler is standing by as his usual fount of knowledge today. Phillip, good morning. How are you?
Hey, good morning, Dave. Doing well today. Hey, it's the middle of the week, and we can officially say earnings season has started with the big banks starting to post their earnings report.
That's it. Yep, you can always tell the first day of earnings season you see your first turkey, and that tends to do that. A couple of tidbits before we get to specific issues as we get down the line. First of all, a good day yesterday on Wall Street. The Dow had a little bit of a profit-taking session, down 68. NASDAQ continued its recovery, up 146. And the S&P up 13.5. Doesn't sound all that terribly big, but it was enough to set a new record. So on balance, I'm going to call it a good day on Wall Street yesterday, wouldn't you?
Absolutely. You know, the Dow it's had some better days than the other indexes. I think the other index is just trying to catch up a little bit now.
Absolutely. And, you know, when you look at the notion in the context of 33,006 and change, down 68 points after a barn burner day on the day before, I mean, okay, fine. We'll take a day of profit taking and say that's the way life is supposed to be. Let's see. Oh, another tidbit floating out just for giggles down the line. I couldn't resist making mention of this. That container ship that was stuck in the Suez Canal for a week a couple of weeks ago. Now the Egyptians won't let it leave because they want the container ship's owners to pay all the costs of recovery and damage done to the canal. So if you got a pair of cheap Chinese shoes coming in from Amazon, you might need to wait a little bit longer, huh?
Yeah, and I can't remember exactly what the number was that they wanted, but it was a pretty substantial sum of money. Like it had a B in it, like billions.
I had it earlier today, and I think I threw the notes away from the thing. Way up into the billions of dollars, towing them out and repairing the canal and lost revenues to the canal. That one might be sitting there for a little while because they want the company that owns the ship to pay the money. Import and export prices out this morning. We don't have export prices as to whether or not we're making more money on what we ship overseas, but import prices are on their way up. Another indication that we're looking at some inflation, 1.2% increase. That was more than the market expected and the biggest annual rate since way back in 2012.
That's right. And it's you know, I mean, every little bit starts to add to the total. And so I look at that, and it depends upon who you looked at. They expected it to go up between 0.9 and 1%. It went up 1.2. That's a pretty good size increase. And so we can see that inflation is kicking in. And like you said, it's a pretty big increase as far as an annual basis compared to what it has been in quite some time.
Absolutely, and I just hold that up against Paulson's 60 Minutes interview, and he basically said, we ain't going to worry about that junk on Sunday, and every indication I've got that inflation could be getting back up to, at the very least, concerning levels. I mean, God forbid it could be like it was in the 70s and 80s, but, still getting up to concerning levels and having the Fed basically saying in public, we're not going to worry about it, kind of gives me pause to think for a moment.
Well, it does, because then what are the traders thinking? They're just thinking, hey, I've got this is a gravy train until the Fed decides they're going to do something. And that's kind of concerning, because then the markets can run rampant and for no apparent reason other than low interest rates.
Understood. So we got not a bad picture of the economy, but definitely some unsettling elements going into earnings season today. And this is the big day. I know that you had Bed Bath and Beyond before we get to the big financials that are really the bellwether of the early part of earnings season. I gather they had a little bit of a miss, huh?
You want to start out the losers, don't you?
Well, I figure that we'll kind of work on association and put all the financials together.
So Bed Bath and Beyond came out. They actually beat both on revenue barely, but they beat, and on earnings per share. Um, but they looking at their month or their quarter, the fourth quarter, sales were down 16%. And that's a pretty significant number for them. That's the Christmas season. And so they're getting beat up handedly today, down 8.75% this morning as we get ready, and they're over 50% below their 52-week high day.
Yeah, the market wants to see improvements. I mean, they may not expect miracles, but at the very least, they want to see an improvement out of these reports, don't they?
They do. They definitely do. And so now we'll switch to the financials, and let's pick up with the kind of the granddaddy Goldman Sachs. They really were the big winner in the financials as far as we can see so far. They walloped the earnings. I mean, they came in at $18.60 a share. They were expected to earn a little over $10 a share. So a significant beat on the bottom line as well on the top line. The top line revenue was expected to come in at like 12.6 billion. It came in at over 17 billion. So they were on a holy tear this last quarter, and they're trading up 1.35% right now before we get going. Now, we look at that and we contrast that against the two other big banks that reported, Wells Fargo and JP Morgan. And they both beat on top and bottom line. The issue is they're not seeing the same pricing in their stock. We had JP Morgan came in at $4.50 a share. That was $1.28 better than expected. Like I said, revenue was higher, but some of that revenue has been because of loan loss reserves being released. And so JP Morgan is actually trading down this morning right now, 0.8%. And that's kind of like Wells Fargo. They were down and they're down again. They beat significantly. I mean, they came in at $1.05 a share. They were expected to come in at 70 cents. So they beat both on top and bottom revenue. But again, top line revenue was because they released some of those loan losses they don't anticipate coming into effect now. And they've been going from green to red. They're back red again, down 0.5% right now to $39.56.
Yeah, and for translation's sake, for folks that don't read balance sheets and income statements very much, back last year when the economy crashed, a lot of these big banks wrote off a chunk of money because they expected a lot of loans to go bad. They expensed it out, considered it an expense back last year when the economy first tanked during the COVID pandemic. Now it doesn't look like they're going to need as much of that, and they're putting it off of the expense books, which means they need to re-realize it as revenue. And the stock market isn't overly impressed when you make your numbers off of an accounting stunt.
Well, that's true. That's true. And obviously Goldman didn't do that, right? They were hard numbers and they came in looking much better than expected. So
as big as their numbers were, they could have done it and they still would have been okay.
That's right. You're absolutely right. They did. They had a really good quarter. It'll be interesting to see how they turn out the next quarter if they can continue this earth-shattering continued growth.
Now, we got a whole bunch of things coming up as the week progresses. Generally, the first 3 days, we hear a lot about the financials. What are we going to hear? Starting tomorrow, we're going to still get more financials. Any other the big marquee names we expect to hear from this week?
Well, I didn't really pay attention to that. I did see that retail sales are coming out tomorrow, I believe. We do have Citigroup, BlackRock, Bank of America come out tomorrow. Your favorite, Alcoa, comes out tomorrow. It's after the market tomorrow, so it'll be Friday before it becomes known. I'm sorry.
Wusses, I said.
Delta Airlines comes out tomorrow. That one could be interesting.
Okay.
Yeah, so we do have some quite a few household names coming out tomorrow before the market opens up.
Understood. Earnings season is just so confusing these days since we lost that old order of things with Alcoa kind of triggering the flood. Resetting the market this morning, we're looking at an up S&P yesterday, an up NASDAQ yesterday, flat to slightly off Dow yesterday. As we get to the market today, 45 minutes before we open, and a few tidbits of earnings out already. How are we doing so far, Phillip?
So I will say, Dave, that we have talked the Dow into being even instead of being down right now. It is flat even at this moment. S&P 500 is up just a tenth, not even a tenth of a percent, that like $1.87. And the NASDAQ is up about a third of a percent. So everything's looking flat to green right now. And then on the commodity side, we've got silver up a quarter of a percent, gold's flat right now, and crude oil heading up 1.4% to $61, Dave.
I got to assume that's projected improvements on demand because the economies are improving around the world, right?
I got to think so because, hey, people are out and about again.
Yep, overseas, for the most part, the Asian Rim was up at the close 6 a.m. this morning. Europe is undecided as to how to react to our early reports. We got a little bit either side of the zero mark as we look across the European Union. Phillip, we've got a time in which there's an opportunity to grow, but there's also an opportunity to lose on the stock market. And the closer you are to retirement, the more that opportunity to lose can scare a person. How do I find you to be able to look at those opportunities through some neutral eyes and with opportunity in mind?
Then give us a call at 863-382-0037. Volatility is going to be around for a while with all that's been going on. So it's important that you know how much risk you have in your portfolio. Again, that number is 863-382-0037. You can also catch our website at statlerfinancial.com. And then don't miss our radio show this weekend, Saturday, 6 a.m. in the morning for you early risers, noon for you late risers, and then Sunday morning at 10 on Highlands News Talk, 730.
All righty, and back here again tomorrow morning on Light FM. Phillip, thank you so much, and I appreciate it. We'll see you tomorrow. Fair enough?
All right, man. You have a great day.
Take care. It's 105.7 Light FM and Statler Financial Services. Phillip Statler from the pit.
All right, folks, I want to thank you again for joining us today. Hey, let your neighbors and friends and family know that we are out there. They can listen to us live every morning on 105.7 Light FM. They can also go to the app, stream it from the app, or catch the delayed version here on Facebook. Please like our page and keep things growing. Hey, have a great day. I look forward to speaking to you again tomorrow. Bye now.